Hey guys, happy Tuesday. Brian Davis and Denny Sablee here, founders of Spark Rental. So glad that you guys are joining us today. Uh, Keep us posted about your questions and comments as we talk through this very personal topic about real estate investing.
For sure.
When your spouse is not on board and you are enthusiastic about real estate investments, but your spouse has some cold feet. So, Denny and I have both experienced this firsthand with our spouses. So, yeah, Denny, I understand that your husband is a little wary about real estate investments, even though you've spent your entire career in real estate.
Yeah, only because, lately the way the market's been and the interest rates. And so, yeah, for the first time, he's very skeptical.
Well, I understand that completely. So, yeah, I mean, let's talk through some of the ways that you even open this conversation with a skeptical or reluctant spouse when it comes to real estate investing.
Absolutely. Just out of curiosity, how is your wife with this whole idea?
Yeah. uh, so
We're going to be
she,
real transparent here.
yeah, that's right. So, my wife Katie hates being a landlord, which I get. I started my career in rental properties and in specifically in lending, actually around fixer uppers and purchase rehab loans. But so I had a portfolio of rental properties when I met Katie, and she saw how miserable managing some of those properties was, and some of the headaches that come along with landlording. We had, Denny, I've told you this story before, where it was like a very early date when I was first dating Katie. And we're hanging out on the couch watching a movie or something. It's 9 or 10 o'clock at night, and there's a bum 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 bang at the door, and there's a tenant who doesn't speak English, and he's there with a translator, and you know at my home, my personal residence,
Oh,
interrupting us, unannounced. And yeah, I mean, that's the kind of stuff that really turned Katie off from real estate investing.
I don't know why.
Yeah, but she has come to really appreciate passive real estate syndications, because you don't have any of those landlording headaches, and uh, you don't have a lot of the same risks that come with single family rentals or very small multifamily rentals. And we'll talk more about some of those risks and how larger real estate syndications can actually minimize a lot of those risks in a few minutes. But before we jump in and start talking about risk, um, let's start from the beginning, Denny, about how to even broach this conversation with your spouse.
Well, I think one of the first things is you need transparency. I like that word today. So,
Yeah,
communication is key in a marriage period, but
sure.
definitely when it comes to finances and money and things like that. So, you have to remember to talk about your goals, talk about things that you want to do in the future. Do you both want to travel? Do all the things that you want to do, and make sure that you're very transparent and open and honest, and that you're both ready to hear the other one. It's not always about talking. Sometimes you just got to hear. So
No
listen to the
question.
fears, don't negate them. Um, but listen to them, because these are ways that you can discuss. Well, there is this risk, but then it's less than this, or so forth and so on. So that's super important, is communication.
Yeah.
You definitely want to change your attitude, instead of like, we need to do this. Period. You want to get them excited, like, because you're doing it together. And I think that is also important. I think so often in relationships, you have somebody who's really excited and the other one's a little afraid. And sometimes you'll have somebody who'll do it anyway, and that creates issues. So you want to both be
Resentment.
on
Yeah.
board, yeah, and get excited about it. Um, and information, show the information. Don't just talk, show, because that goes a long way, rather than just saying, well, it does this, that, and the other thing. Especially when you have somebody who has seen some of the landlording issues that you come upon, because there could be definite fears about that. I too have had similar situations as you have. I've been approached at supermarkets, and everything else. So I understand how that is. And one of the great things about investing this way is you don't have those issues. So definitely
Yeah.
an
So,
important.
one thing that jumped out at me that you just said there was listening to your spouse instead of just talking over them, because your spouse has their own unique objections or concerns about real estate investments, and in many cases those are justified. And even if their concerns are unfounded, you still need to know what those concerns are so that you can address them in a systematic and respectable way.
Absolutely. And the other thing is we all come from different backgrounds. My background, my father was a real estate investor. So I was used to it. I was used to the issues that come along with it and the good points that come along with it. So you may have somebody who has no clue, or somebody whose parents were like, very negative when it came to it. So you really have to understand that, and instead of negating it, kind of be like, okay, okay, I get that, but, and kind of that way, that approach.
Yeah. So, my experience has been that most people who are skeptical or reluctant to invest in real estate, it's because they perceive it as being higher risk than other types of investments. Um, that is in many cases not true. So I'll give you one quick example here. There was a study done, a very comprehensive study over 16 wealthy countries over the last 145 years,
Hmm,
and they looked at how different asset classes performed, and
well,
they found that across these 16 countries, of which the U.S. was one, by the way, but and most of the rest were in Europe and Canada and so forth. They found that rental properties actually not only performed better than stocks return wise, although it was similar. It was around 7% total returns, but they were much less risky than stocks, at least by the measure of volatility, which is the main measure of risk, right? So, and we'll link to this study as well. But they found that you actually can get those high returns, but with half of the volatility, half of the risk, as you get with stocks. And then, of course, bonds were way lower returns, um, but had similar volatility as real estate, as
right,
income real estate. Um, but the prices on real estate only tell half the story. So
right.
there is some volatility in real estate prices. It's way less than stocks, of course, because real estate is not very liquid. Um, but if you look at historical recessions, home prices do sometimes dip by 5%, 10%. We've seen a housing market correction this year, actually, in some markets. It's still actually a minority of markets, but
Mhm.
that has been happening in some markets. But what doesn't fall during recessions are rents. So even when home prices dip 5%, 10% in a recession, rents do not. And there are a couple
I've
reasons for that.
actually seen in my area that they go up.
Yeah, because people who were homeowners sometimes lose their homes to foreclosure if they've lost their job potentially, or so they go from being homeowners to renters, right?
Mm,
Driving up demand for rental housing. Or you also have a lot of people, would be home buyers, would be first time home buyers who otherwise would have bought a home, but because a recession hit, they didn't feel comfortable doing so. So they continued renting when they otherwise would have left the rental market.
right.
So all of that buoys demand for rental housing, which keeps rents either consistent or rising during recessions. So, in many ways, rental properties are a recession resilient investment. Um, and what always drops during recessions and leading up to recessions are stock markets. So, once again, real estate offers, in many ways, a lower risk alternative to the stock market. Way less volatile. Rents do
Absolutely.
not fall. And if you invest in commercial real estate, and in particular apartment complexes, you spread that risk of rent default out over hundreds of units, as opposed to owning like one single family
Hmm.
rental property where,
Where one eviction or one late rent can.
oh yeah, can totally throw off your returns for that entire year.
Hmm.
Whereas, if you own a stake in an apartment complex that has 200 units, then, yeah, at any given moment you might have a couple turnovers, but it's all just numbers on a page at that point,
Right.
right? It's just, you just have a certain vacancy rate at any given moment, which might fluctuate
And
a
they
little bit,
expect that.
but
I mean,
yeah,
apartment communities, I used to manage large apartment communities, and that's just part of the, you know, bottom line. They add it in.
exactly. Yeah, that vacancy rate is accounted for in those returns when you invest in an apartment complex.
Right.
Um, so by diversifying both away from stocks and into real estate, so that adds a whole other asset class to spread your risk over different types of investments, and that reduces your risk right there. And you can, of course, diversify within your real estate investments as well, and that's a lot easier to do when you invest in real estate syndications, at least if you're investing as part of an investment club like we do, where people can invest with a few $1,000s instead of the typical 50 or $100,000 that you need for either buying a rental property or investing in a real estate syndication.
And it really speaks to both of the fears of getting involved. One is the dealing with the tenants and all those problems, and dealing with, what happens if you have an eviction or whatnot. Now you're at a loss. So it kind of speaks to both of those.
Yeah, and when you invest passively in real estate syndications, a lot of the normal risks that landlords face don't apply at all. So you actually dodge all of those sorts of risks. And I'll give you some examples here. One is legal liability, right? I mean, people do sometimes sue landlords. That is, legal liability is a
Really?
risk. Yeah, well, yeah, yeah, you know all too well, as do I. I've been sued several times as a landlord. So yeah, I mean, that is a risk that you take on as a landlord, is legal liability, the risk of being sued. You don't have that liability or that risk when you invest as a limited partner in a real
Right.
estate syndication. That's written right into the agreement you sign with the sponsor, with the syndicator, is that you have no legal liability. You also don't have loan liability. You are not signing as a guarantor on any debts or financing, which again is not the case as a landlord, right?
Right.
Most landlords go out and they buy a rental property and they take out a mortgage for 70-80% of the purchase price, and they're
And
on the
then you
hook.
need the down payment. So now you're looking at a way bigger investment.
Right.
Cash.
So you put down a certain amount of cash, and that cash is, of course, on the table and being risked in the investment. But you
Right.
also sign on the dotted line as a personal guarantor for the entire loan too. So all
Hmm.
of that is part of your liability. When you invest in a syndication, you're only investing the cash in there. There's no loan liability. There's no personal guaranteeing of any loans. And like we talked about before, there's also no risk of phone calls, headaches as a landlord. There's no risk of emergencies, the roof collapsing while you're on vacation and you're trying to figure out, trying to line up contractors to go take a
No,
look. You don't have any of those headaches or
no one
risks.
knocking on your door while you're watching a movie.
Yeah, exactly. um, you also don't have the headaches and the risks of filing for evictions or chasing down delinquent tenants, court appearances to get rid of a bad tenant. You don't have
Dealing
any of
with
those risks.
judges, which is its own headache.
Yeah, you don't have tax complications or the risk of incorrect reporting to the IRS because you just get a K-1 at the end of the year. So a lot of the normal risks of investing in rental properties don't apply whatsoever when you're investing in real estate syndications. It's completely passive, and you avoid all those risks, but you still get all of the benefits of investing in real estate: the diversification, the high returns, the tax breaks, all that stuff. Uh, so I'm guessing that your spouse is probably not very familiar with real estate syndications and how they work. Um, so it becomes an issue of just helping them learn about them, and the more
Right.
they learn about them, the more open they will probably be to them, understanding that obviously no investment is without risk, but these risks are actually pretty manageable compared to either normal rental properties or to the stock market.
Which is, and again, you want to let them know all about this and that there is less of a risk when you're doing these type of syndication deals over, what they think in their mind, which is buying a duplex or a single family home and renting it out.
Right.
I think that once this is discussed, because a lot of people don't realize this is even an option. So once it's discussed, people, it's kind of mind blowing, to be honest with you. I mean,
Oh yeah, the concept of like infinite returns.
mhm.
Your spouse probably is not familiar with infinite returns. I mean, with the idea that you get your initial investment back after a certain period of time, but you still retain your ownership. So at that point,
Right.
there is zero risk for you because you've already gotten your money back. From there, it's just collecting passive income without any of your own money tied up in the deal. So, and we'll link to an explanation of infinite returns as well. Um, but one final note before we wrap up about recessions and the risks of different types of investments. When you invest in real estate syndications, you can also invest in even more recession-proof types of real estate than even apartment complexes.
Oh,
For
that's
example, you can
right.
invest in
Yes.
self-storage facilities that are like the definition of recession proof, because what happens during recessions? People downsize. And when people downsize, they don't have enough room for all their stuff. So what do? They rent a self-storage unit. So um, yeah, I mean, you can invest in these sorts of recession proof investments, or I guess
Oh
nothing's
my
technically
goodness. There's so many mobile home parks and
yeah, the definition of affordable housing. Yeah.
vineyards. So if you and your
Vineyards.
spouse are into wine, that's a good sell right there.
There you go. So yeah, I mean, most spouses who are reluctant or skeptical about investing in real estate probably don't understand the risks of at least of real estate syndications versus the risks of either the stock market or the risks associated
Hmm.
with individual rental properties. So invite them to join a club meeting in our real estate investing club. Take our free class on how real estate syndications work. Um, expose them to how it works, and the more that they learn, the more they will at least be able to turn you down from a place of knowledge, right?
Right.
At least they'll be able to refute your arguments, speaking from a place of experience, or not experience but knowledge.
It also
But
provides a thing for you to do together. And that can, in today's busy world, anything you can do together and spend time together, even if it's planning for the future, is good.
absolutely. Denny, any other thoughts that you want to share about broaching this subject of real estate investing with your spouse?
No, I think we covered it all. I think that you need to understand that this way is definitely less risk. There is risk, but it's less. And be together, open communication, and open hearing. We're so also quick to talk, but we don't listen.
It's very true. And acknowledge the risks that do exist. So for example, real estate syndications are not liquid, right?
Mhm.
So you are tying your money up for years on end. Between 2 and 6 years usually. So that is. I mean, I don't know if it's a risk per se, but it is a downside to real estate syndication investing. The minimum investment, even when you invest in a club like ours, so where it's $5,000 per deal, that's still not trivial, right?
Right.
So that is a downside to acknowledge. So acknowledge the downsides,
Hmm.
as you have this conversation, which comes back to Denny's original point of transparency when you talk
Right.
about these things. So
The good, the bad, and the better.
there
Left
you
out the
go.
ugly.
All right. Well, on that note, thank you guys so much for joining us. We will catch you next week. And in the meantime, stay in touch. Support us,
Absolutely.
sparkrental.com.
And
And
send us
please,
things you want to talk about.
exactly. And if you enjoy these quick podcast episodes that we do, please give us a nice friendly rating on your favorite podcast platform. We appreciate it. Have a good one,
Absolutely.
guys. We'll catch you next